why is a pre-approval important?
So important. You don't want to start looking for houses with your realtor and then find out that this house is way out of your budget and you can't even get close to that. So when you hear those announcements on the news, it has nothing to do with your mortgage. Your mortgage payment is not changing, nothing affects you. You're just going on with your regular day.
Hello, everyone. Welcome to my channel. I'm Shakaib Khan, a real estate broker here in Fergus, serving Fergus, Guelph, Arthur, and beyond. And today we're diving into the biggest question home buyers have: how much do I really need for a down payment? To help break it down, I have a special guest with me, Atifa Juma, a mortgage specialist with nearly a decade of experience working in the banking industry. Atifa, thanks for joining me today.
Thank you for having me, Shakaib. So yes, my name is Atifa Juma. I am a mortgage agent with Dominion Lending National, and I do come from a banking background. Previously worked in the bank at RBC for 10 years. So I'm happy to be here and happy to help answer any questions you guys have.
Awesome. Let's start with the basics.
Okay.
So when some when someone thinking about buying a home, what's the first thing they should know about the down payment or the credit?
Okay, so credit, we'll start there because I don't think a lot of people know how important credit really is. And it is very important because at the end of the day, you're trying to show someone how credit worthy you are. Do you pay your bills on time? When you borrow money, are you looking just to borrow, never pay back? And how do you manage your money? Are you good at managing or are you not? So everyone knows you have a credit score for a lot of lenders, or if you are going through like the mortgage insurance, you do have to have a minimum beacon score of 600. If you're a self-employed client, that it's a little bit lower, but that is the minimum beacon score if you're going through CMHC is 600. So it is your score is very important. It tells a lender how you are with money.
Right. And so minimum score 600 that you said, it's based on the down payment or regardless?
No, so regardless, so down payment is something completely different. So the down payment is exactly what you are going to be putting in, right? And when we discuss minimum down payments, that can get tricky sometimes too, because a lot of people will think, especially for first-time home buyers, 5% is all I need. So yes, 5%, but 5% only on the first 500,000. Anything above 500,000, the difference, it has to be 10%, all the way up to the 1.5, where to that point you have to have 20%, no questions asked. So whether you're a first-time buyer or a second-time buyer, but buying your primary residence, yes, it is 5%, but only up to the 500,000. So if the place you're purchasing is 600,000, on that $100,000 difference, that 100,000 needs 10%.
So you will basically need $35,000, 25 for
Correct.
$500,000, and 10,000 for that additional $100,000.
Correct. So your minimum down payment on that 600 would be $35,000,
All right.
which does not
And
include any closing costs, but we can get to that later.
okay, yeah, of course. So what is CMIC? And mostly buyers who are maybe thinking about buying it or doing research, they heard about CMIC or insurer. So what is CMIC?
So CMHC is Canada Housing Mortgage Corporation. It is for anyone in Canada that's buying a house, putting less than 20% down across Canada. Okay. Essentially, it's a mortgage insurance premium that gets added to the mortgage and of the lifetime. It's not something you pay out of pocket. It just gets added to the mortgage and it's extended over the 30 years. But essentially, it backs the lender in the event that the client defaults on their payments. So that premium can be anywhere from $5,000 to like $30,000, depending on how close you are to putting 20%. The closer you are, the smaller the premium. The further you are, the larger the premium.
And we already talked about the down payment. So what sources of down payments a first-time home buyer can use, like in regards to the purchase?
Yeah, that's a good question. As a first-time buyer, you are able to use number one, your RSPs. So if you have any RSP savings, as a first-time home buyer buying your primary residence, you can take, I believe right now it's $35,000 that you can take out of your RSPs, which will not get taxed. There's a form you fill out. and it gets sent off, you're able to use it towards your first home. And then you do have to pay back that amount though within 10 to 15 years. It does have to be paid back though. So it's not something that you just get to take out and not put back in. It does have to be put in, but you are able to use it. Another form of, you can use like your own savings or investments. If you have TFSAs, the first-time home buyers accounts, any money that you have saved, you can use that. And if you are getting a gift from a parent or an immediate family member, gifted down payment is also available to use. And I will also mention that this money that you use for down payment does require a 90-day history. So that's something that people don't know. But we do require a 90-day history of any funds that are being used for a down payment.
For a down payment.
Yes.
Whether it's RRSP or you have your savings plans or anything, you need that 90 days.
We need that 90 days. So if someone opens up a TFSA and it's only been open for a month, the bank will ask us, okay, but where did the TFSA money come from? So show us the trail of which account it came from and it was deposited into that account. So there has to be a trail of the money so that they can verify. It's really just for anti-money laundering rules in Canada. They just have to verify that the money is in fact legit.
All right. So, and this is a good question, and I get asked all the time from the first-time home buyers. That what benefit do first-time home buyers get?
Okay, I get asked that a lot too. And you know, it seems like there's like, you know, so many benefits. There's not that many, for my opinion. Yes, first-time home buyers can use their RSPs. So if you have been saving, it is great. You can use it. So they're allowed to do that. And then they also get a discount when they pay land transfer tax at time of closing. But essentially, I think that's really about it in terms of first-time home buyers.
Right. Okay.
Yeah.
So the next question that I'm going to ask, Atifa, I think you will be the best person to answer this question.
Okay.
What is the difference between working with a mortgage broker or the bank? You've been in the bank for a long period of time, so you can be the best person to answer this question.
Yeah, that's a good question. So they both have their, I guess, pros and cons, right? So when you're working straight with the bank, it's very limited, right? So you have to fulfill the conditions and, you know, fit in this cookie cutter box. And for whatever reason, if you don't qualify within their guidelines, at that point, there's not really much they can do. It's either you have to wait, save more down payment, maybe get a cosigner, like things like that. The difference when you're working with a broker who has access to many different lenders, not just the 5 big banks, is exactly what I said, that if you don't fit into that cookie cutter place at the 5 big bank, you might be able to look at a smaller A lender or a B lender whose debt servicing ratios can go a little bit higher. Self-employed clients who maybe have great deposits and they're rotating, but they just don't claim enough on their, you know, like the T1s or NOAs, they might be better fit for the B lending side because we can qualify them based just on their business bank statements. So you never have to turn a client away. There's always a solution, and you know, they can buy a house. They don't have to feel like, man, I really wanted to and now I can't. And I think that's the biggest difference between the mortgage specialist at the bank and working with a broker.
And I agree, because when you're working with a particular bank, they have different policies. But when you're working with different lenders have different policies. And you can choose based on the file, I believe, right? That, okay, which lender will be suitable for this file.
Exactly. Yeah, exactly. More options. Yeah, absolutely.
Yes, perfect. This question, I like this question, the one I'm going to ask you, and I highly encourage every buyer to do that. Why is a pre-approval important?
So important. A pre-approval is important because you don't want to start looking for houses with your realtor and then find out that this house is way out of your budget and you can't even get close to that. So, and it's kind of like dream crushing for some people, right? Because then they find this house, it's their dream house, but they just realize, oh man, we can't even do this. So pre-approvals are very important. Your broker is able to put together the numbers, your debt, your income, your situation, your down payment, and actually give you a live number that, you know what, this is a good number. this is where you can purchase up to, so that when you go to the realtor, you can actually let him know and he can narrow his search and say, these are the houses that are in your search. Let's go take a look at them. It doesn't waste your time as a client, going around. It doesn't waste the realtor's time. And that way you are a little bit more, I guess, solidified in your deal as well. So when you actually do purchase that house, all the legwork has been done and the approval process becomes a lot more seamless.
And faster too.
Much faster. Yeah. And I mean, when I work with my realtors, I will also let them know that this is your client's max, please, like, don't go over this,
Right. Right. Yeah. No, love it. It's amazing. I enjoy working with clients who are pre-approved,
Yeah.
and then we are not running around, because when we do send these conditional offers, mostly the industry standard is 5 days, 5 banking days, but those 5 days they fly for some reason. I don't know why. Regardless, even if the weekend is falling in between these 5 days, or even if the long weekend is falling between this time, but time goes fast, and then we're running around with the paper. So once this is pre-approval is I love pre-approvals or pre-approved clients.
No, absolutely, because then you don't have the lender asking a ton of questions in those 5 business days, and you're trying to gather all this information. But if you've done the legwork, we already know we have all this, and this is just kind of what we're focusing on. So absolutely, get pre-approved.
Exactly, and it's very important. Sometimes you fall in love on a property and you're not pre-approved somehow, and you end up losing it because of that. Or sometimes. So, but yeah, no, love it. I love it. This is great. What other costs are involved at the closing?
Great question. Besides the down payment that you give, your total down payment, you do have closing costs. So that could include your land transfer tax, which it varies. It's not the same for everyone, depending on where you buy, what the purchase of the property, purchase price of the property. You have your lawyer's fees that you have to pay a lawyer to actually close the deal. And I'm trying to think, aside from land transfer and lawyer's costs,
there is a tax on the insurance too, like if CMHC insurance premium, there is a tax on it.
Yes. So that if that's there, that would all get added. And those are your, I guess, your main closing costs that you need to see. It's also important that some lenders actually want to make sure you have that money also ready. So they will ask to make sure that with your down payment, we want to make sure you have this much money as well available for closing costs as well.
Correct. Yes. Yes. And what's the difference between a variable mortgage and a fixed rates mortgage?
That is a great question, especially with all the announcements that happen all the time. Great question. So if you have a fixed rate mortgage, that means you chose a term, whether it's 3-year, 4-year, 5-year, and you got an interest rate that went with that. Now, in a fixed rate mortgage, that interest rate is not changing for the entire term of your mortgage. So when you hear those announcements on the news, it has nothing to do with your mortgage. Your mortgage payment is not changing. Nothing affects you. You're just going on with your regular day. Whereas a variable rate mortgage is linked to prime rates. So anytime that the Bank of Canada announces those prime rate cuts, it will affect any and all of your variable rate loans, including your mortgages. So the prime rate is something, your bank gave you a discount off of that prime rate, and now you have a rate. Now, anytime prime rate goes up, your rate would go up. Anytime prime rate went down, your rate would go down. Now, the difference between the two is with some lenders, your payment might not necessarily change, but the amount that goes towards interest and or principal will differ. So when you're paying a higher rate, more of your payment is going towards the interest, right? Versus when the rates start to go down, more of your payment is going towards the principal. And some lenders actually have an adjustable rate mortgage where your payment will actually change to reflect changes in that interest rate. So that's a great question, because a lot of people don't know that those rate announcements have nothing to do with their fixed rate loans.
Correct. Yes. Yeah. And I'm going to ask you the final question, which I'm always confused about as well. And recently someone was asking this question, so I thought I'm going to ask you, and you can shed some light over this question. So
Okay.
we heard about so we already talked about the fixed mortgages and variable mortgages. What about, or what is the difference between open variable mortgage and a
Mhm.
closed variable mortgage?
Okay, yeah. So a closed variable usually is, let's just say, a 5-year term. But what it means is that you can break the term or pay it off anytime you want, and you would pay a 3-month interest penalty. It's usually what it means, okay? Open variable means you can pay it off anytime you want with 0 penalties. So you don't have to pay anything, but your interest rate will be significantly higher
It is
because
always
it's
a catch.
always a catch, always a catch. Yes, the interest rate will be significantly higher because it is an open. And usually people are going to do it open. It's like 6-month open. It's not a very long, you don't want to take on an open variable for very long because the interest rate is too high. But if people are thinking about, they have this house, they're going to sell it in 5 months or 6 months or something like that, then it's a good idea to have that because you're not going to be paying that penalty.
Oh, okay.
But
Instead of going towards a private mortgage for a year or 6 months, you're better off getting the open variable mortgage with a little higher interest rate.
with a little higher interest rate, yeah. And then you can sell it or pay it off or whatever the case is, and then there's no penalties to it. But yes, it is a higher interest rate.
Yes. Yeah. Oh, wow. Is it significantly higher interest rate or just a little?
It can be significantly higher. Yeah, it
Okay.
can be. I don't want to
Like you
quote,
can
I
feel the
don't want to
difference,
quote
like
any
when,
rates, but yeah, it can be.
okay.
Yeah.
And something related to this penalty on the variable mortgage that you said, it's a 3 months interest penalty, right? So let's say if you're paying $2,000 interest every month in your mortgage, whatever your payment is, right? And 2,000 going towards the interest, so you're paying $6,000, right? And
Essentially.
what if the term is almost at the end? So let's say if only 3 months
Mhm.
left or 2 months left, let's say. So will they still charge 3 months, or they will charge the 2 months, or like when you are already close to the end?
So that's a really good question. So the closer you get to the end of your term, the smaller the penalty gets, obviously. Your renewal
Yes.
period, yeah, your renewal period is actually 120 days. So for the most part, once you're within the 120 days, your penalty is very, very minimal, if any, to be honest. So the further out you are, the larger that penalty is going to be. So yeah, I mean, if you're a month out, it's going to be very, very minimal.
Correct. Okay.
Yeah.
Awesome. Thank you very much, Tifa, for taking so much of your time. And I
No, thank
appreciate
you.
all the answers. And viewers, thank you very much for watching the podcast. And my number will be on the screen. Atifa's number will be on the screen. You can call anytime, me or Atifa. If you have any mortgage question, definitely you will call Atifa. Atifa's number will be there. Atifa will be more than happy to
Absolutely.
answer any questions that you have. Or if you're looking for the pre-approval, or you're
Yes.
looking for some competitive rates, Atifa will be able to help you. Even if you have a pre-approval from the
Yes.
bank, Atifa will definitely can help you either get you a better rates or better terms. So feel free to contact Atifa as well. Atifa, can if you don't mind, would you be able to share your number or any contact information with the
Yeah,
viewer?
absolutely. You know what? I'm going to, and I'm sure Shakib will have this all, kind of put together, but I will show you guys and I will say it. Like I said, so let me see if I can show it to you. My phone number, I will say it, is 416-731-8501. And you can send me an email as well. It's just we can post it. It might be easier, but it's just atifa.juma@dominionlending.ca. So I think we can post it or maybe write it out so that clients can refer to it. But feel free to reach out to me anytime. Like he said, I'm happy to help, and even if it's just for the free advice.
Great, yes. And same thing with me and Atifa both. You have no obligation to work with us. If you
Yes.
just wanted to get a second opinion from us, uh, with real estate, you can contact me. Or if you just wanted to get a second opinion from Atifa in regards to the mortgage, feel free to call, email her, text her, or even maybe you can book a Zoom call with Atifa, and she will be more than happy to help out. Thank you again, Atifa, and thank you viewers
Thank you.
for watching. Stay tuned for the next podcast.
Thank you. Bye.